Market holds steady amidst economic uncertainty surrounding the conflict in Iran. I'm Tony with Clarkson Santoro, and this is your real estate update for the week of Friday, April 3rd. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Starting off, we like to look at how the market performed over the past week. And this week, inventory stayed the same at 59 homes, with the average asking price rising just a little bit, up from $1,821,000 last week to $1,906,000 this week. 8 homes went pending, again, same number as last week, but the average asking price for those pending sales dropped from $2,140,000 or just about to $1,875,000 roughly. And 4 homes closed, fewer than the 7 we had last week. And here is the more significant part of that. The average closing price is down by $300,000. So now we know how the market performed this past week. What I like to do next is look at the broader indicators and market trends that help us know where the market might be heading. Before we look at those indicators, if you do find this information helpful, why don't you hit the subscribe button down below? That way you can stay informed as I release new videos. And while you're down there, why don't you share it with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's look at those broader indicators. Starting with inventory. And that stayed the same this week, like I said at the beginning. This is a very similar stat to the last week's inventory level movement. Any week where the inventory level isn't growing and is staying pretty level, it's actually been that way for the past couple of weeks, is a good thing for maintaining home value and market strength. With inventory levels remaining flat, that gave the turnover rate another week to improve as well. You see here over the past couple of weeks it's been improving significantly. We are back above the 50% line, which is encouraging, but again, we want to be closer or at that 100% line to be in a more neutral market when we're thinking about sellers versus buyers market. But again, any improvement over that 50% line, which is where we have been living over the past year pretty consistently right around 0.5, is a good sign. Anything beyond that. The over-under numbers continues to improve and to perform much better than the turnover rate would indicate. With the inventory up and turnover rate sluggish, I would expect that homes would be closing less than their average asking price. But as you can see from the beginning of the year, we've stayed right around, if not above that break-even line, which is a great sign. With the homes that are selling closing for more than they're asking, it points to the need to be very strategic on pricing and presentation as a homeowner putting your house on the market. The price of the homes that have closed in the past 30 days has remained basically the same also. You can see here it's a very flat over the past 2 weeks. With the small sample size that we are currently working with, having the value stay relatively flat week over week means that closing prices are very close and not having a lot of broad diversity in that price range. It is very easy for the average to drop significantly or shoot up significantly week over week if we have, since we have fewer homes closing. So having it stay relatively flat tells me that we haven't seen that significant jump in lower level price range activity like we did earlier this year. The triple Q also closed basically equal to last week's closing numbers. It did have a significant drop in the middle of the week, down 5% again, but rebounded to break even with the closing of last week. With the rest of the stock market still reacting to the war in Iran, having the tech-heavy triple Q stay level on the week is a good sign for our local real estate market. Speaking of the market reacting negatively to the war, interest rates continue to climb. You can see they've been going up pretty quickly here in 2026. They didn't go up by double digits again like we have had in the past couple of weeks, but we are now back to almost 6.5% at just under that. These high interest rates will have the greatest impact on keeping our turnover rate from improving significantly, and they are unlikely to reduce while the conflict in the Middle East continues. Overall, this week has been very uneventful in the San Ramon housing market. The good news is that inventory stayed flat again this week, and closing prices over asking are holding as well. There is obvious general financial and economic concerns related to oil prices rising due to the ongoing conflict in Iran. That will continue to play the biggest role in keeping the market from taking off. But the fact that it's holding strong amidst general economic uncertainty is a good sign for us here in San Ramon. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you don't miss out on future updates. And if you're celebrating Easter this weekend, I hope you have a good Easter, and we'll see you next week with a new update.